What is up, Bitcoiners? Welcome back to another episode of FedWatch. My name is Ansel Lindner, and I am here with my special co-host once again, Nolan. How are you doing today, Nolan?
Ansel, I love life. It's been a great couple of days, right? The whole world's paying attention to Bitcoin with everything that's going on. Everyone's paying attention to what it is you pay attention to all the time. Fed news, there's all kinds going on, all kinds.
All kinds of news going on. It's hard to whittle it down to the most important thing every week because it does seem like there's multiple big news items of the week. But we have whittled it down to talking about Bitcoin and Bitcoin's price pump this week a little bit. Producer price index, that's like the flip side of the coin of CPI is PPI. So we're going to talk about that. And then talk a little bit about Davos. So Davos hates Bitcoin. What's new? So we're going to go through an article on that on a panel that they had about Bitcoin over there. And lastly, followed up with BIS stuff. The BIS wants to ban Bitcoin, of course. So we will be diving into that. Before we get started, guys, make sure you like and subscribe this stream. We are streaming on YouTube and Rumble. So a lot of times we like to have a competition. How many live viewers can we get between the two platforms? So make sure you're subscribed and you like this episode so other people can find this live stream. All right. Nolan, what do you think about today's topics? And do you have anything to plug, man?
Well, I always like to plug the breakup every morning, 8 a.m. You can watch it on YouTube. You can watch it on Twitter. Sometimes we use Rumble, but it's a bit of a pain to get it up there. But like what Ansel was saying, the Rumble algorithm treats us really well. So I've got to try and find a way to make it work.
Awesome. Yeah, just admin for me is check out bitcoinandmarkets.com. That's where I do all of my content. You can find my daily podcast there. You can listen to the daily live stream like Nolan. I do a daily live stream roughly midday every day on Twitter and YouTube and Telegram. So check all that out at bitcoinandmarkets.com. Okay, let's get into the Bitcoin price pump this week. First things first, got to talk about Bitcoin. So, Chris, can we have slide numero uno? There we go. And we've talked about several of these resistance zones for a long time. And you can see that it flew right through the 17,000 to 18,000, that price range there that was, I thought, going to add or have a lot of resistance, flew right through there, right through the 200-day, which is the orange line. And we have struggled to break up above the FTX the pre-FTX high. So if you go to the left there back in November, that was the high right before FTX, then FTX crashed it down. So you can see we've made a lot of progress, but we have kind of gotten to a place where we're somewhat oversold on the daily still. So I think we could come down and hopefully find support on the 200-day and then continue up higher. But it does have a feeling that crypto spring is here, or at least there's some thaw on the ground. So Nolan, what's your thoughts about the price here?
I'd say at the very least, they should keep tuning in to you because this is exactly what you predicted on the show last week, if I'm not mistaken. You were really looking at these exact bounds, and before it had made that run in the green that you see, you had been saying that's the next move for it to make logically based on the consolidation you were seeing at the bottom. So your prediction was true. That's pretty neat thing to turn around like that. So no, I guess my only thought on all the thing I covered, and not that I believe it, but and I appreciate that it even came out, was the Tucker Carlson theory. Now I'm not promoting it. Don't think it's true. Something happened and we don't know. We want to look into it, but it was this. It was that the day all the flights grounded was last week, right around now, if I recall. As we were doing the show, we were dealing with the national outage of all airplanes.
Yep.
And they said it was attack, and then it happened in Canada the next day. So what's going on with all that? And Tucker Carlson, now, don't know if it's true, right? But what I saw was $40 billion in volume. And if we would wonder if a $6 or $7 billion ransom would be measured in any of this stuff, well, 40 billion is a lot, and it looks like that's what the volumes were that day, but it kind of blends into the volume averages from the days around. So we're here to look at the numbers and some of the bigger trends. So everything that went on with Tucker, I think, is worthwhile and fun, kind of, right?
Yeah.
But wondering about all that is important for what we do too, you know?
Yeah, we'll never know. I think a cyber attack makes more sense than the official story. So at least there is that. And I would say if they're going to buy Bitcoin, they wouldn't do it on the market. They would probably do it, over the counter with somebody. And what that would do is dry up liquidity from market makers on the exchanges. So you might notice a little bit of an increase in volume on the exchanges, but really they wouldn't go and do like market buys or something. So there isn't really any fingerprints to find, is what I'm trying to say. So it is speculation, but it makes more sense to me than the official story. So
And interesting that we live in a world where insecure centralized systems are being exploited for the benefit of decentralized systems. So, Bitcoin wins. Everyone went to fly that day, no good. But do you want to be flying in a system that can be crippled so easily, right? If that brings you reassurance, maybe. But seeing these two forces compete, just in theory, is pretty interesting for a macro outlook, and not one you're going to find in most macro shows, right?
yeah, and there's no bad press for Bitcoin. So when these people that were affected, I mean, millions of people were affected by this FAA shutdown. They now have been once again had a touch point with Bitcoin, and people say, "Oh, it's going to link Bitcoin to criminals," but no, I don't think so, because criminals don't want to get paid in fake money. They want to get paid in real money. Right. And so they're not like they're not robbing the banks to get a bunch of paper. They're robbing the banks to get the diamonds and the gold bars and the real money. And so, yeah, this is a touch point for people to expose them to the idea of Bitcoin as real money. Even though there is this slight little negative connotation to it, there is, that doesn't affect on Bitcoin. It's like if they would have asked for gold, let's say somebody has a ransom and they ask for gold, that shouldn't have a negative connotation against gold. I mean, obviously they want good money. So yeah, this is the same thing with Bitcoin. And every time we can get it in the press like this, I don't think there is any bad press for Bitcoin. So.
Yeah, I put in my own bio around Bitcoin that the minute I saw the drug dealers using it, I said, this thing has legs. This thing has legs, right? For other reasons. But once you see it there, it's real. It's real.
Yeah, and I don't know if I've said it on the show here. I've been saying it on my live streams. Is Andreas Antonopoulos? He said, if you can't buy drugs with it, it's not money.
Yeah.
And if you can't accept ransom in it, it's not money, right? Yeah, so that is very similar.
Andreas, as always, the wisest among us. And I think I agree. That's probably where I got it from too. When people were criticizing Silk Road, that those were my thoughts. Well, that's pretty cool.
Yeah. So where are you thinking? Do you have any thoughts on any sort of near or midterm price targets? Do you think we're my
instinct says it was a bear trap, and there's more of this sideways stuff to come. But as long as I don't have any skin in the game, I get these things right.
Yeah.
But the minute I would start putting money on this, I'm sure the price would go up. I would inverse Kramer it. So my feeling is we need the narrative, right? And in these sideways markets, it's one thing to be contrasting with everything that's going on with FTX. That's good for Bitcoin. I still think that the next wave of attention to Bitcoin will come from things like the sovereign debt bubble actually having trouble, real estate bubbles actually having trouble. And more importantly, though, it can't just be negative news. I still think the next cycle comes with energy finance stories. And the Bitcoin miners just aren't in a position right now to be dreaming at the scale they will be in a few months. I don't think it's going to take too long. I think by the summer, you're going to be hearing conversations. That's why at Bitcoin in Miami, May 18th to 20th, we're going to be talking about energy literacy the same way people have financial literacy since they first went down the Bitcoin rabbit hole. They're going to have in Europe after the cold weather, after even what we saw during that storm over the Christmas holidays, where some estimates say 1 million homes ended up receiving heat because the whole grid was, and therefore excess capacity could be delivered once prices were too high to actually mine, and it would go back to individual people. So, you know, there's going to be all kinds of conversations now. Even this whole ridiculous thing you hear everyone debating about the propane stoves, right? We talked about it on the show last week.
Yeah.
You know, there's nothing, you know, the debate itself was predictable, as we've seen. Doomberg predicted this debate about stoves months ago because he said there's going to be better markets for the natural gas abroad, and American companies are going to sell them and therefore put PR around it. So he was just, you know, coming up with what he thought was going to happen. And it did happen. But nevertheless, Americans are going to just be more conscious of the energy choices that are out there for them, and they're talking about it more. And that's how Bitcoin is really going to click, right? When Bitcoin actually starts forming the major metric for energy markets. And we're going to talk about that more today, but I'm sure we're going to be mentioning a bit about BRICS 2 and all these other things, these gold stable coins, the other energy market folks are coming up with. Of course, all of this is going to fail, and their failures are going to be the main thrust for Bitcoin next. That's how I see it, and those narratives are just getting primed right now. So, I you know, but I could be wrong. I could be wrong.
Well, you bring up the sovereign debt bubble, and that was going to be one of the stories that we were touching on here first, and it has to do with the U.S. debt ceiling being hit. So I have a story here. This is from is it MSNBC? Who is it from? NBC News. And I just want to read a little bit here and then we can discuss it. So the U.S. government hit its statutory debt limit on Thursday, and the Treasury Department said it has begun resorting to quote unquote extraordinary measures to pay the bills. In a letter to congressional leaders Thursday, Treasury Secretary Janet Yellen said those special financial tools to meet the country's obligations can continue until at least Monday, June 5th. After they expire, Congress will need to act to prevent default. Yellen said in the letter that the period of time that extraordinary measures may last is subject to considerable uncertainty, including the challenges of forecasting the payments and receipts of the U.S. government months into the future. And I want to highlight receipts because, if we are going into recession of some sort, or at least an earnings recession or something like that, the receipts paid into the government are going to make that deficit greater. So continuing here, I respectfully urge Congress to act promptly to protect the full faith and credit of the United States. Like raising the debt ceiling is going to do that. All right, continuing here, just a couple more sentences. This was Jason Smith of Missouri. He's on the House Ways and Means Committee. He said, quote, instead of attacking his political opponents, President Biden should be spending this time working with House Republicans to address the debt ceiling in a way that imposes some fiscal sanity. Otherwise, the president is simply scheduling America's next debt crisis. We should be dealing with the debt ceiling without conditions. It is important. We're not going to negotiate on this, said another. This was Jean-Pierre, the White House press secretary. Scrolling down in this story, we cannot raise the debt ceiling, said Andy Biggs, representative from Arizona, Tuesday on Twitter. Democrats have carelessly spent our taxpayer money and devalued our currency. They've made their bed, so they must lie in it. And that is the extent of the article. One thing I'll say is we go through these all the time, and we were talking there before the show. When I was in the military, we had these debt ceiling problems come up, and every time it got close to not paying the troops, they've solved the debt ceiling. So that's like, if it goes past that and there is like, say, 1 month where the troops aren't getting paid, then I will start to worry about it. But until then, this is all just political theater. Your thoughts, Nolan?
Yeah, it's pageantry. You want to believe this time it will be different, with Congress sort of changing its form and scope recently with all that, last week's major thing with the speaker and all of those votes, if you remember, just last week when that was the number one story. So some people at that time, when all that was going on, saying that this kind of thing would be on the negotiating table, they would actually let the government default and they would not buckle with this debt ceiling thing. So I think it's kind of a win-win, right? If they actually don't do it, we get to see how things operate without anyone steering the ship, maybe they're okay. We'll find out, right? But again, it's pageantry, and I think we're all pretty confident that they'll do it. If they don't, fun for Bitcoin, I would say. If they do, then more of the sideways stuff I was talking about yesterday, and pageantry, and we are indeed dealing with the psychological commodities that are Bitcoin and the dollar, and this is more stretching on an already thin and taxed psychology, as far as I can tell.
Yeah, I remember last time that they were going through the debt ceiling, they got months into this where they had to do extraordinary measures, like Janet Yellen is saying here. And it was basically cutting programs back. They cut funding for many things. And I think it exposed that we don't need that government spending. The government functioned just fine when they were running at half capacity. Like, why do we need to be spending all this money? And so I don't think they're willing to risk the public catching on to that. What do you think? Is that in the back of their mind?
I mean,
too?
ultimately, absolutely. If you go back, I was talking about a thread I read about World War I and where debt-based currencies really came from at the beginning of the Fed. Remember, the Federal Reserve and the Social Security system come in at the same time, right? And so does the income tax. All of this stuff happens at once. And I've thought for a long time that if Bitcoin is going to take on the Fed Reserve system, in the end, collateral damage will be the other systems that were born with it at the same time, like the Social Security system with the income tax, and just the way it functioned. And so we're seeing that now. I mean, everyone, now that we've stretched the psychology of money printing to its limit, people are indeed asking the question they should have been asking from the beginning: why do I have to pay taxes? If you can just put it on a number and it's a thing and a stuff, do it.
There was a bill just introduced, right, in the House, where they got rid of the income tax and the IRS in the same bill. So, I mean, this has been a talking point for a long time, but, it's getting more and more up front where people are talking about it. So anyway, that's all I had for the debt ceiling. Let's jump into the producer price index. So I have a few slides here, Chris. There we go. Number one here is the PPI final for December. The demand declines 0.5% in December. Goods fall 1.6%. Services increase by 0.1%. And I have a few slides here. So next slide, please. This is the basic month over month producer price index. And like I said there at the very front intro, this is like the flip side of the coin to consumer price index. So this is what the producers get from selling it to the retailers. And the CPI is what the retailers get from selling it to the public, to the consumer, the end consumer. As you can see, this is a total reading here, month on month, at negative 0.5% in December. This is the second negative month for producer price index. And it's pretty bad. I mean, this is the lowest, other than COVID. You have to go back to 2014, and then before that, 2009. So yeah, this is some major contraction in the producer price index, which goes along with what I have been saying, that this quote unquote inflation or CPI that we've seen, all these price increases, are transitory, and we're going to see massive slowdowns on these in 2023. I expect, just like this is negative 0.5%, I expect to see something like this on CPI in the next couple months as well. So yeah, that's going to force down the headline CPI number very, very quickly. Now, Powell is seeing this, right? Powell sees all these things out there, chairman of the Federal Reserve. He's taking these into consideration in the back of his mind. But they are still ruled by R star, which is the employment rate. That's all they really care about, is the employment rate. So until that starts going down, I don't think we're going to see any major, at least narrative shifts. We could see a pause here in rate hikes, but the narrative shift won't happen until we start seeing some declines in employment. So I have a few more charts, but do you have anything here, Nolan, to add to this first section?
Yeah, I think the lag that you mentioned last week, there's a month delay in how different calibrations end up manifesting in the number. What I'm hearing you say is that the PPI is slightly ahead of the consumer end. They're first in line in the production process. But this brings back to our major conversation from last week about the overshooting. And if I'm correct, what you say, they don't really care about these numbers right now. It's all about more or less demand destruction. Fewer people to spend money is the fastest way to slow the broad base of the consumer economy down, which looks like is the goal. Is that what I'm supposed to understand?
Yeah, well, they'll admit that their policy, if it does work, monetary policy, that it works with a major lag. You'll hear that constantly, that our monetary policy works on a lag, and that could be anywhere from 6 to 18 months. There's a big, long lag with monetary policy. So I would say, like, look at this. That's why they always pivot late. They always are behind the eight ball on their pivots because it takes a long time for their policy to work, but they react to data dependency. They'll say they're data dependent. So if you're data dependent and your policy has a year and a half lag, you're by definition always going to be behind the eight ball, and that's what the Fed is looking at here. So yeah, and I know if the Powell sees this, like I said, but it really doesn't. I don't think it factors into his thought process. Okay, let's go into the next couple slides here, Chris. So this is a little bit busy. It's showing goods, food, and energy, and I break it down here a little bit more. So next slide is just looking at goods. So this is not food, not energy, and not services. This is just goods, like you would buy widgets out there, and you can see it crashed negative 1.6% in December. And this is the producer price index. So this is a huge decline. On the next slide, the reason why I wanted to break it out for these two is because this is energy, and you can see it's almost down at negative 10%. It's about negative 8%. So it doesn't even fit onto the chart with the other one that's at negative 1%. But energy and food, they're very volatile like this, like you can see. And so that's why they look at core. So if you go to core, I think it's the next slide, core is showing that we're still positive on core. When you take out that huge negative energy print and the negative food print, then you get core. And it's still slightly positive. But what I want to point out about this chart is one term or one saying that I've been using a lot over the last couple of years is that we're going to return to a post GFC normal of low growth and low inflation. And you can see in this chart, that's exactly what it appears to be doing. It's returning to, very, very low PPI. That is a world that has no growth, no vibrancy, no positivity, no hope. That is what we're returning to, is a period of low growth and low inflation. So, Nolan, any comments on these kind of different components of the PPI?
We're going to be getting into the WEF real soon, but that's what Larry Fink, the great sponsor of WEF, said. The system itself is constrained in its imagination now because it lacks hope in these things.
Yeah, I was actually going to think about playing that clip, but I decided not to because I didn't have it ready in time. But I thought it was interesting because they make their money off of fear mongering and spreading not hope, spreading fear and FUD and all of that stuff. So they are actually the ones responsible for crushing hope out there, and Bitcoin is the source of hope. So I thought that was very interesting.
Yeah, it's and that it's coming out in these numbers is pretty clear, right? You see the in a liftoff, really.
Yeah.
Right. There's no liftoff here.
Yeah, perfectly said. All right, well, let's break into Davos. So I wanted to, of course, Davos is the World Economic Forum. They're meeting in Davos, Switzerland. They're headquartered in Geneva, but they've been meeting since 1971. They were, just some background here. They originally were called the European Management Forum, and they were founded around Klaus Schwab's ideas of stakeholder capitalism. Of course, that is just socialism light. That's what he started this as, stakeholder capitalism, where you had a duty and a responsibility to the world more than just your shareholders. You had stakeholders that you had to serve. So that is a socialist idea. Anyway, in 1974, Father Camara, who was the founder of liberation theology, he was an outright communist. He was persona non grata in the West, but he was invited to speak at Davos. And guess what? Klaus Schwab called him his spiritual father. So Klaus Schwab called this massive commie his spiritual father. Anyway, and you can see this strand of Marxism and communism all the way through the WEF with their Great Reset, where you won't have any private property. You'll own nothing and be happy, right? That's a straight out. It could be a Communist Manifesto talking point. So that if people wonder why I call them global Marxists, it's because they are global Marxists. Shorthand we can also use as just globalists, or Davos man is what Tom Luongo, friend of the show, what he calls them is Davos man. So that's some history on Davos. Do you have any thing to add for that before we get into the main article?
Yeah, the advice they had 2 years ago for Sri Lanka was you can make it without fertilizer. Complete collapse. And then last year their advice was FTX is a really good future of investing, and that
Yeah,
didn't work out so good. Their 2 years ago was Putin, and then last year was Xi, and I guess that's not working out so well either. So they have a real history of getting things wrong. And now what you have to understand about them, like Ansel said, they began as a conference. It still is a conference, right? It's just a conference. It's a show. It's a show. And it used to be regarded as the most important, let's say, financial show. But as you said, it really was the financial, economic show, but for the managerial class, right? It was a managerial class thing. And that's really where it came from. I don't know if you knew this, but Switzerland is where they invented the MBA. The MBA comes from the Swiss hotel restaurant degrees.
Oh, really?
These hotel restaurant degrees were about managing these huge resorts, and you had to understand marketing, you had to understand, shows, right? So the whole framework we have for the MBA was borrowed from the Swiss hotel restaurant management system. To this day, if you want to work for an NGO, that's what you do. If you're like a rich East Coast kid and you want to go work for, let's say, the Red Cross or one of these, that's what you do. You go to a hotel restaurant school in Switzerland and drafted immediately after not to a hotel or a restaurant at all. You've been, according to them, received the greatest MBA education you can get. We repackaged the whole product for business school in America, but that's really where it comes from, right? It actually comes from Switzerland. So, but we do a show. So now that they've discredited themselves, right? Now that everyone has turned them into this meme, and look, show, and they're not a transparent one. So we don't understand the pay-to-play nature of the whole. As I understand, you pay about $650,000 to be a member of the Federation. And then once you're a member of the Federation, you can help shape the agenda. You can help say what they're going to be talking about. You can do those kinds of things. But it's based on that fee system. And here's the weird part. Normally in America, if you're a politician, for example, pay-to-play events, you're not allowed to go. There's all kinds of rules around that. I know because I manage what will be now, I think, the largest financial event in the world. I think Bitcoin 2023, now that Davos has outed itself as a commie show fully, and it's now in the popular mind and has been used to sort of understand memetically what's wrong with the world right now.
Yeah.
The WEF is just a show again, right? Like I think we should laugh at them. They're ridiculous. I don't lose sleep over these folks, right, and what they do and all their other stuff. But nevertheless, they're great to focus the attention on what's wrong with this type of thinking to begin with, and they can't help but expose themselves every day. We should encourage them to meet more often because it's funny. It's so funny.
Once a month.
We had, what did John Kerry say? That he's an extraterrestrial because he's been touched. Select people have been touched to save the world. And then he gave the answer that we're interested in, right? He's been touched. He's the select person. But what's the answer? Money, 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 money. He said it straight up, exactly as I said it now. Money, 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 right? So all of these folks that helped build this event now I think have abdicated what the role used to be. And it used to be a place that was sort of in the mainstream, right? It was an event that made it into the mainstream of consciousness and people paid attention for a little while, and now has become this great joke. And that's perfect timing for us, because I think in many ways our show is the actual contrast, right? Like we're not talking about how ESG and what energy you should limit yourself with at our show. We're going to talk about how to get rich off of what's happening in energy, right? So the good news is with all of their craziness, they've made the battle lines clear. And it looks like in our world of Bitcoiners, to fight against them, our biggest way to protest is to get rich and and share our knowledge and skills and systems with everyone who's like-minded. That's what makes Bitcoin more and more like a country, I think, right? Is that we share all these ideas and we come together. So anyway, I encourage the WEF to keep it up. It's great. It's really great contrast for Bitcoin. It's great contrast for our events, right? We're the anti-WEF now officially. Like I think officially we're actually it, and that's a good place.
That's a good narrative right there.
Well, it's true. It's sort of the same subjects, except totally different,
Mirror
and totally
opposite.
different solutions. And as Mr. Fink is worried, oh, where's the hope? Right? Come to our show. It's a great time. It's full of hope. We're all happy. We all think the world's going great, right? We can't get enough of this stuff. Let's go. Let's rock. What's up in Japan? What's up with the sovereign debt? When's this going to collapse? Who knows what tomorrow will bring? Who knows, right?
Oh man, so many good points there. I think we can see some of what you're talking about in this article. So if we can pull that headline back up, Chris. So this is just a article that goes over a panel that they had about crypto regulation. Okay, it's really how do we put a noose around Bitcoin's neck and just call it crypto. But I have a few quotes here from it. So if you go to the next slide, they were speaking on a panel, and this was Singapore's senior minister, Tharman, long last name that I'm not going to pronounce, and also the ECB's governing council member, Francois, another last name that I'm going to butcher. So Tharman and Francois. And anyway, here we go. So speaking at a panel on the challenges facing banks, this Tharman from Singapore and Francois from the ECB emphasized the need for crypto regulation, a sentiment echoed by UBS Group AG chairman Cole Keller. Keller had kicked off the conversation on digital assets by commenting that regulators had, quote, taken their eye off the ball with respect to the non-banking sector. What I thought was interesting about this quote is that they never had their eye on the ball to begin with. They didn't take their eye off the ball. They've always been 4 years behind. Where were they? Where were the regulators when we had the ICO scams? Where were the regulators when we had the DeFi and the leverage and the FTX? Well, do you know where they were? The regulators were talking with Sam Bankman. They were taking money from Sam Bankman, right? So who's going to regulate the regulators? That's what we should be asking. They never had their eye on the ball, let alone taking their eye off the ball.
Yeah,
so
I actually booked that Singapore minister Tharman years ago. I've met him, and I booked him for a show in 2018. And we wrote a headline based exactly on what he said, that he was going to make Singapore a place where we would know what was okay and what wasn't. So this is 2018, just after the ICOs, right?
Yeah.
He said, we're going to figure out how to do this the right way, and we're going to be a place that everyone's going to come. And we recorded it. It was broadcast live. We wrote an article with that as the headline, Singapore going to create a thing. He had us on the phone until midnight that night, complaining and crying and saying, I never said I was going to do that. You guys put words in my mouth.
Are you serious?
Yeah, it was a big deal.
Wow.
And we were there, and we were all trying to because I was on the event team and the journalists did it, because we invite our journalists. This was when I was with CoinDesk, and we invite our journalists, and they come, and the journalists were reporting on this guy Tharman and saying, what did he say? And he said exactly, he was playing with the crowd, I guess, right? He was playing with the crowd,
yeah.
But he said exactly what you're saying. Like he wasn't even willing to admit, literally 4 years ago, what they're asking him to talk about now, right? He just wasn't
Yeah.
willing to admit it at the time, and he even said it out loud. And then even I had to say, so I came in. That's the story. I came in and I listened to the recording to make sure what the journalist wrote was exactly that, to know who to back, right? Because you're not going to put pressure on a journalist because someone said they didn't say that. If they really didn't say it, then okay, I'm sort of on your side. I'm not going to let a journalist put words in your mouth. That's not their job. But that's not what we saw. And in the end, I had to, even though it was more of a pain for me, I had to side with the journalist, right? Like, it was easier for me to listen to Tharman. I was the connection, right? So I booked him. So and then they said, we'll never deal with you again. And now they get to go to WEF, so that's okay. We don't need them. We don't need them.
Yeah, we'll never deal with you again.
Yeah. Like, what kind of a speaker are you? You come and I can't use your words that you say, and you're a speaker? What's the point?
Right.
You're a speaker. You're not a not speaker, all right? You're not a, here's some words, you can only use some of them. You spoke. It's done. Game over.
None of this was off the record. This was all on the record. Yeah.
We're literally a news service. Like, you are here to make news. Other than that, I don't know what you're doing here. I'm not here to hang out with you.
Also, he has history with the space. That's interesting to hear. All right, let's go on to the next quote here. This is still Keller from, I think it was UBS, right? He was UBS AG. Quote, all of them have one common feature, and he's talking about crypto here. Crypto, like mixing in not only businesses and exchanges and exchange-based tokens like FTT and Binance Coin, but he's lumping in all tokens and including Bitcoin. So all of these things have one common feature. They're all linked with non-banks. And here we lag behind. It's more difficult because it's a very evolving landscape, he said. We should rush to some urgent non-bank regulation, starting with cryptos. For Singapore's Thurman, quote, some things are very clear. Whether it's crypto or traditional finance, we've got to regulate the things like money laundering. But he suggested that regulating crypto assets through a banking lens risked legitimizing an asset class he described as inherently speculative and slightly crazy. So what I have to say about this is that, we've been saying this for a very long time in Bitcoin, that if the Fed actually comes out and bans it, what they do is they legitimize it. They say that they're scared of it. They say that there's something there to be banned, right? Either it's a joke, as Jamie Dimon said this morning or whatever out there, or said today in Davos, that Bitcoin is just a simple scam and a huge fraud. If it's a joke, why do we need to have coordinated regulation around the world? So the more that they go after it, the more they legitimize it as a real commodity, as a real asset class. And I would say here, if you want to talk about something that's inherently risky and slightly crazy, just look at the WEF's talking points. Okay, just look at ESG. Just look at all this stuff. That stuff is a little bit more than slightly crazy. Just look at Klaus Schwab in his Emperor of the Universe garb and say he's not slightly crazy. All right, so that's all I got. What do you got, Nolan, on this quote?
How about this? I think so. Here's how I'll start, and I'll work there. I'm a big supporter. I'm going to give my full-throated encouragement and support for UBI as the Bitcoiners' case for UBI, and I'll tie it to these guys because when the Bitcoin, when hyper-Bitcoinization happens, it's going to break so many brains, like just right. That they're not going to be able to work and do stuff anymore. Like, they're not going to be functional. So we got to be imaginative of what we're going to do with everyone who was, a minister of the economy, an economist,
bureaucrat,
what are we going to, yeah, journalist. What are we going to do with these people, right? So I got a game. We're going to make, and people, it's going to generate revenue. That's why it's going to generate attention, right? People are going to watch. People are going to spend Bitcoin watching this. And it is make the Davos people live in the Davos they describe. Like, just make them live in the world they thought that would,
like Survivor.
Like Survivor, So you basically just say, well, we're going to put you in this game, and it's going to be one big incentive trap, right? The whole thing is going to be an incentive trap. It's going to
and they can get off the island when they repent. When, when they
I
repent,
don't
they can get off
know.
the
No,
island. How about
I
that?
want it to be one of these things like, you know how people have had to navigate all of these things as poor people. I want it to be one of these things where you have to choose between like not going on vacation and you know, I don't know, like eating terrible food for a week or something. Like those are the prizes. You know what I mean? Like slightly better food or slightly shitty vacation or just a real hoot, right? A real hoot, like a real flip, right? So, yeah, basically just these impossible choices that normies have had to make for years, where you can't win because you're stuck in this incentive trap, and that things would be funny, like watching Jerome Powell say, I can't go on vacation this year. I would watch that. Like if there's some kind of game where he doesn't win a vacation at the end, you know, I don't know. Call me a jerk. Call me crazy, but that's what I want to see. Um, and I also think the other idea that I saw was for this came from Elon Musk, that we should have another trivia game where if it was said on 4chan or WEF, and then you have to guess which was the crazier.
Oh, that's a good one.
So you don't get to know which one it is, right? And then you have to answer. Was that said on 4chan or was that said on WEF? That could be a good game show for the you know, for now. So the UBI thing for the Davos man, I think that's a given. I think every Bitcoiner in the end is going to get behind that. In the end, we all are going to be UBI supporters just to make sure Davos man is secured after hyper Bitcoinization, and it could be hell of entertaining stuff. We might even bring a bunch of these Davos men to like look at them at the future iterations of Bitcoin 2027. You know, hi little Davos man, you know,
Put them behind glass. Help me.
What was it like when people listened to you? Was it funny? You know, when everyone had to listen to what you had to say. Remember when you put masks on people? Was that funny? You know, we'll see how many needles you can take to win a vacation. You know, and give them a bunch of needles. You know, how many
Or like
can you fit in your body before Christmas? You know,
like the Spartans, they used to the I guess the meme is that they put their kids out in the elements, right,
yeah,
to see if they
yeah,
would survive. But this
yeah,
is like grown. This is adults. You know, we're
yeah.
doing this with the WF people. We're gonna put them out in the elements to see if they can survive.
Yes, yes,
Okay.
yes.
All right. Well,
We can only hope, guys. We can only hope. One
let's
day.
keep going with some of these quotes here. So this next one is from Keller again. He's the chief AG at UBS, and he said, or he echoed a refrain that has become common among executives at both traditional financial institutions and crypto companies. Quote, "We are looking for a regulatory framework that will allow us to accommodate that for our clients," he said, referring to the desire by some UBS customers to invest in digital assets. So even if they do regulation, they have to carve out some way to let it survive because their clients actually want it. I think that's like the dissonance in these comments are just crazy. So let's continue here. Keller was bullish on the underlying technology of blockchain, describing it as unstoppable, while sounding a note of caution about the current difficulty of ensuring compliance with laws and policies around know your customer and anti-money laundering. I think that this also shows that they know Bitcoin's unstoppable. They know it, but they're just going to claim it's blockchain. So they're going to put it off on the blockchain and not mention Bitcoin being unstoppable. So any thoughts on that? Or I have one more quote that will wrap it up. What do you got?
Yeah, I do. Talking about clients, talking about
Yeah.
all of these counterparties, sophistication, da da da. Da. This is just a little simulation winking during Davos week. You know, everyone talking about the commercial side of all this, and Credit Suisse. You know, so Credit Suisse is the big bank over there, and they're getting into real trouble right now. So Davos is in Switzerland. Credit Suisse is the big international Swiss bank. So they're having a lot of financial troubles. There's a run on the stock itself, the value of the stock. There's been their bond, I guess they issued, is not doing very well. So I don't know the exact details of what kind of crunch they're in, but it's pretty bad. And so they had to bring out the CEO to address it. And the simulation just winked at us by giving us the name of the. Do you know what the name of their CEO is?
What's
Layman.
Oh yeah.
Layman. It's a
Say
layman.
it. Say it again. You broke up.
Layman, as in like the layman. So the layman is the CEO of the Credit Suisse who could be the thing that triggers a lot of what we saw
Oh boy.
13, 14 years ago. So I just saw that coming out of WEF as well, and I thought that was pretty funny. So.
Oh yeah, Credit Suisse is in a whole heap of trouble. This last quote here is from another person. This is from Citigroup's chief CEO, Jane Fraser. And she said it was important to step back from debating crypto as new and shiny, though maybe less new and shiny, and instead turn to more urgent considerations. Quote, let's focus on the issues that really matter to the world right now. How do we weather through the storms we're facing at the moment? And what struck me about this is just the total, like, we don't even care about Bitcoin. It doesn't matter. So how are they going to be able to build a coalition to coordinate international regulation over an asset that my clients want, and that solves all these problems around the world? No, let's not worry about this. Let's shove it off in the back. If we give it too much attention, people are going to notice. So let's talk about things that really matter, like ESG, and how do we stop people from heating their homes in the winter. So any thoughts on this comment?
The good news is this is who we're up against, right? This is who we're up against. So the good news is the sum total of their success can be described like this. Scott Adams wrote this and tweeted it about, and he's the creator of Dilbert, right? So he is the sort of master of criticizing this executive class and managerial class of people. So he goes, the creator of Dilbert was impressed with the track record of WEF, and this is what he wrote about it. For example, they watched Norway create a fund, took credit for the work of members, mobilized coalitions, bragged about the work of signatories, teamed with others, signed a compact to develop a framework which will allow the measurement of a long-term approach, agreed to 6 principles, and endorsed. It's all just stupid fluff, these people. She wants to focus on the priorities. Well, good news is let her go in her tangential of nonsense, of fake work, of nothing, and let them work. I'm going to try and say the word correctly. The Sisyphean, did I get it? The Sisyphean, the torturous punishment of the person who had to push the ball up the hill for their whole life, right?
Okay.
It's the same incentive trap that I was talking about for the WEF show, right? They're already kind of in it. Some of them are already in it, right? They're still getting paid because they're close to the money printer. But I think it was Jeff Booth, one of the Jeffs in Bitcoin on Twitter said that, like, we shouldn't think of them as elites in so much as they're the people who have benefited the most from being near the money printer. And that's what we're seeing writ large, right? We're seeing the benefits of being not like us doing Fed Watch where we're watching them, but being like Fed Touch. They're into the Fed Touch situation, right? Get touched by the Fed, let the Fed touch you, you'll get these benefits. But we're not playing that game, right? That's why we're Bitcoiners. We're not letting the Fed touch us, and we're not touching them either, right? We're in the world where, and I think that is the main schism that we're going through in the world, and that our show Bitcoin 2023 is about, and Davos is about, right? The system that they're describing is the world where you have a boss, right? Whether it's a manager or whatever, this is a world of bosses and people who follow. And that was the way it was built. In the world of Bitcoin and the world we're headed, it is the world of I'm not the boss of you and you're not the boss of me. And we're going to get along just fine under those conditions. So that's what we're looking at here. They want to get back to their priorities, which means they want to write an email to a person for a plan that no one will ever be able to measure, and no one understands, and no one cares. Nobody cares. That's the good news, right? People want energy. They want gas stoves. They want electricity. They want gas. They want cheap energy. They want to go places. They want to move places. They want to do things. And in the end, Bitcoin is going to calibrate, I think, the entire energy market and become the main measurement of that market, and therefore our path to victory, right?
Yeah, I have a little bit different take on who these people are. I think they're extremely religious people. They're religious people in a secular world, and they're trying to find some religion to latch onto, and that happens to be being a technocrat, saving the planet. That's their religion. So that's how I see these people at WEF. They're actually religious people in a secular world, and they pride themselves on being secular, even though they're the most religious people out there, in my opinion. So anyway, let's go on to the last topic of the day. We have about 8 minutes left for the hour, and this is the BIS report. They put out these bulletins, and you can see the title of this is Addressing Risks in Crypto, Laying Out the Options. And I have a different view on the BIS than most people. Most people think they're evil. You know, the central bank of central banks, they're kind of like the final boss, and that Karsten Augustus or whatever his name is, the head of the BIS, he just kind of looks like a final boss type character. But what I think, I almost look at the BIS as I have indifference towards them. They have some good academic papers that help you see what the people are thinking out there, because they don't hide it, right? These people will be honest with you how they think. And so you just read their papers and you understand them a little bit better. But the BIS to me is not evil. It's just kind of non-important. So let's dive into, go ahead.
If I'm wrong, because when I worked in the Senate in Canada with Mark Carney, when he was the governor in Canada, and he was the governor of the BIS simultaneous to that.
Okay.
And my understanding at the time was they don't actually even have a balance sheet, right? They have the ability to help settle between nations, but they're not the same as a central bank like the Fed that runs a balance sheet. But I could be totally wrong about that, but that was my impression.
That's correct. I don't think they're actually a bank. If they are, they're a think tank basically.
Think tank, yeah.
Yeah, they're the think tank for central banks. And
that was always my understanding.
Yeah, and they set the Basel requirements. So they're located in Basel, Switzerland, another Swiss organization here. But they set these Basel requirements. It used to be like 4% you had to have as your fractional reserve. Then it was like they defined different tiers of capital that you could have. You had to have so much of tier 1 capital, so much of tier 2 capital. They actually just included Bitcoin in one of those tiers. So you can hold. Yeah, so they have legitimized Bitcoin as part of the tier structure of Basel. Yeah, so we'll have to cover that in a future show.
But they threw out the conditions around COVID time, didn't they? Like the actual capitalization of banks, the thresholds were reverted back. They were supposed to come in.
Well, they didn't. They didn't. The Fed did that actually for the United States, and I think most central banks did that for their own jurisdictions. But the BIS, I don't think changed anything. They come out every few years, every couple years, with slight revisions, and the most recent one was adding Bitcoin to that.
Yeah, sorry. What I meant was I guess it was Basel III was supposed to go into enforcement or action, and then they just didn't proceed with it or something.
Like they might have delayed it a little bit. I don't remember exactly, but
yeah, nor do I.
Yeah, but we'll cover some of the Bitcoin requirements or tier structure that you can use Bitcoin on in a future show. But this was an interesting thing here that they had, and you might have seen this image floating around the internet. So let's jump into the next slide, this slide number 14, and let's go through this. So after the failure of several major crypto firms, addressing the risks of crypto markets has become a more pressing policy issue. Crypto asset markets, I mean, it's crypto firms, crypto assets. They just never say Bitcoin or Bitcoin ecosystem or Bitcoin industry, which we all know that that's the only thing out there. Anyway, so crypto markets have gone through booms and busts before, and so far the busts have not led to wider contagion threatening financial stability. Yet the scale and prominence of recent failures heighten the urgency of addressing these risks before crypto markets become systemic. And I wanted to point out that they know that Bitcoin is not going to die. They know Bitcoin is here to stay. And they said we need to address these risks because it's going to become systemic. They know Bitcoin is going to become systemic. So that is what they're trying to head off here. So continuing, the crypto ecosystem and the shadow financial functions it engages in through centralized financial entities and decentralized finance protocols share many of the vulnerabilities that are familiar from traditional finance. But several factors exacerbate the standard risks. These relate to high leverage, liquidity, and maturity mismatches, and substantial information asymmetries. Policy responses should consider how to address these sources of risk appropriately, given the borderless nature of crypto. This bulletin briefly summarizes the lessons in of the 2022 turmoil. It then outlines 3 non-mutually exclusive lines of action to address the risks of Bitcoin: a ban, containment, and regulation, as well as their pros and cons. So my thought here is this doesn't describe any risks for Bitcoin. They're talking about leverage and liquidity and maturity mismatches. These are all industry, corporate, traditional finance functions. These have nothing to do really with Bitcoin. They don't talk about Bitcoin. They don't talk about smart contracts. They don't talk about, like multi-sig, Lightning Network. They don't talk about any of this. All they talk about is the traditional financial functions: leverage, liquidity, and maturity mismatches. So, Nolan, do you have any comments on this, or should we go on to the image?
Yeah, that's a good observation. They're talking about the financial engineering aspects of it, which are already looked at with suspicion by Bitcoiners as it is, right? That's the problem when you mix and match crypto with Bitcoin, is that you're mix and matching worldviews at this point, right?
Yep.
You're mix and matching worldviews. They're not the same thing.
Exactly. Okay, let's pull up this image, because it's a pretty image, and it goes through the ways that they think about banning, containing, and regulating Bitcoin. Some of these are pretty good. So let's go through these. Ban, it's a specific, or to ban specific crypto activities. So pros are: it will eliminate potential harm to the financial system, and it will prevent losses due to crypto service provider misconduct. Of course, nothing in there about like benefits of it being money. It's all about the industry. So the cons of banning it are: it could conflict with founding principles of society. Okay, yeah, it could be illegal or unconstitutional. That's what they mean. Useful innovations would be lost or delayed. And one thing I want to point out here is, like, the BIS, it's in Switzerland, it's in Europe. It's not part of the European Union, but it is there. And, part of the Euro area. They are going to really regret doing these regulations, because the US is not going to do regulations. They're not going to get coordination from around the world. Japan's not going to do them. It's going to, instead of maybe becoming some sort of Silicon Valley of crypto or Bitcoin, the Europeans are going to piss that down their leg too. Just like they pissed down their leg the original Silicon Valley. These people
you don't have
are
anything from
insanely
we're
stupid.
not waiting for them. We're not waiting for them.
Okay, the last con of this ban is it may be circumvented in practice. Good Lord. They know they can't do this. All right, the second one is contain. So isolate crypto from TradFi and the real economy. The pros are: to prevent crypto from damaging the real economy. All right. Avoid giving crypto a regulatory seal of approval. Well, that if you try to contain it, you're actually saying that it's something good. So, just like the people that do ransomware, they want real money. They don't want fake money. The cons of containing it are: fully effective firewall may not be feasible, and the investor protection and market integrity risks within crypto remain. Oh man, so they, at least I can sense that they realize they can't really do much to ban it or contain it. Yeah, this is a capitulation. Okay, now regulate. Now they could actually do something here on the regulatory side. So let's see what they say. So regulators, or regulate the sector in a manner akin to TradFi. That's how they should look at this. They should just, hey, let's just regulate a Bitcoin exchange like we regulate the New York Stock Exchange, right? That's how they should look at this. Pros: ensure consistency in regulating financial activities, allow responsible players to innovate in a regulated space. And the cons are: challenge to map crypto and TradFi activities and entities. So not everything is a one-to-one, that this is covered under this regulation and that regulation. I think it is for the big corporate businesses. It's not for, say, Bitcoin or Lightning Network or Liquid. Those things are new and hard to classify. So I can see that. But for the companies, they definitely can do a one-to-one. And the last thing they say is: challenges for enforcement, given lack of clear reference points in some some cases in DeFi. So at least they're seeing, I think, the proper limitations to their role here. And the last thing, Nolan, before I get your response on this, is the last thing in the orange box: develop an alternative. And my face is over this. Build infrastructure to allow for sound innovation. So develop an alternative, like a CBDC. You know, like
this is what I like is that this is one of those things where they're relying on like Janet Yellen to go on the road and like sell something. You know, like she's the charismatic. We're gonna innovate. You know, we're gonna build something new and it's gonna be great, and you're gonna get all the things you want. So, and it's these people who think, you know, it's that whole group of people who believed in the managerial class, who in that kind of corporate structure for all those years of work at one point, and now has, like the money, succumbed to interest, burning pile of caca. And you know, you end up getting these people who believe that's a plan. Like, remember when Janet Yellen had to go on the global taxation sales tour? I mean, have you ever seen anything more pathetic than little Janet Yellen going to countries and saying, you got to tax them just like us, otherwise they're going to leave and they're not going to pay us the money. What are you doing? Now, she got away with a few of them, right? She did. She got away with a few of them, but not enough, and not all of them. And one can imagine a bunch of people were like, well, what are you doing here, lady? Who the hell are you? Like, so these are sovereign countries that she's telling what to do regularly, and that's what it would take, right? It's a bunch of sovereign countries that they believe now will become so charming and charismatic that, you know, basically it's their big dream that JFK is going to come back alive and, you know, inspire everyone to do the right thing for everybody. It's the Peace Corps, right? We're going to get it done. That country's gone. Forget it, guys, you know?
Yeah, they rely on coordination, and coordination is breaking down. Collaboration is breaking down. International institutions are losing trust left and right, and so all of their plans, their best laid plans, rely on some international institution to enforce it.
Yeah,
and they just don't have that anymore. So,
and
but
a charmer to hypnotize people to get them to be into it.
Yeah, and I think that this whole working paper or whatever that we're going over here, I think they do. If someone's to read this, so let's say some regulator somewhere in the world is going to read this paper, I think they're going to walk away with saying, crap, we can't ban it, we can't contain it. I mean, we could try to start talking about regulation, but even the BIS, the think tank of central banks, they don't know how to do this. They're saying that maybe these are some options. So I think it's very positive, because it shows like they don't know what's going on, and it's starting to sink into them that they can't ban it or contain it. So very, very interesting. But that's all the time we have, Nolan. Do you want to plug your show or plug some Bitcoin Magazine stuff?
Indeed. You can catch us every day, 8 a.m. again, on Twitter. You can find me at CountBTC, the same on YouTube, and every day, 8 a.m. And we talk a lot about programming, Bitcoin 2023, May 18th to 20th in Miami. And we're going to be talking about all this kind of stuff. We have all kinds of big names. You're going to see. We got the best macro people. We got the best people to look at what's going on in the Fed. We're going to talk about no more taxation. We got all kinds of independent journalists coming. We're going to talk about energy literacy, everything you need to get ahead in the world and be the biggest American rebel you can be, which is to get rich, right? That's the best way to win World War III, is to get rich. And then you don't have to listen to these people. So we're trying to help people get smart, get financially literate, get literate in energy, right, which is a whole new thing, like being literate in energy grids, finding out why you're paying so much for energy, and maybe saying it's because, Greta, whether she's happy or not, is not really a good way to run your energy policy in your country, right? You should not care how Greta is doing if you want a good energy policy. I don't think she's happy still, no matter what people have done. But, we're not here for Greta's happiness. We're here for a whole new group of people whose childhood we don't want stolen, for real. And that's what's up.
Awesome. Yep. Check out bitcoinandmarkets.com for all the stuff I'm doing. Also, check out bitcoinday.io. If you are in South Florida, there is a Bitcoin Day event in Naples on this Saturday, and I think there's still a few tickets left. So check out bitcoinday.io. I will be there. Greg Foss will be there, as well as a few other Bitcoiners. So it should be a high signal show. Small audience, high signal guests and speakers. So check out bitcoinday.io for future stuff. If you can't make it to Naples, they are traveling around the country. So that's all I have for today. Chris, take it away, please.